about making sure that workers who are on these projects are paid good prevailing wage. And I think the Biden administration has spoken about this at length. This is going to be part of the discussion, and I'm looking forward to seeing what they do about it.
Nicole Smith, Georgetown University Center on Education and the Workforce Chief Economist. Thanks so much for joining us today. Coming up, a blackout at a nuclear enrichment site reignited.
Well, what a day today. Day that momentum stock got really hit by basically the CPI data that's gonna be released tomorrow. And already you can see the momentum stocks are, and cannabis, I mean, Varia, Tilray, OGI, they're really all among the worst performing of the day. So at the top side, what do we have? We have Riot, Mara, thanks to the Bitcoin performance recently. Also, we have Roblox, Gap, Uber, Tesla. Tesla plus 2.7, so that's a very good. I think at some day it went over 700. Yeah, 704. So I would say mixed day, but of course more on the basically negative side, if that makes sense. Can is being demolished, minus 23%. I was in this for some time and took profit, I think somewhere around here. Yeah, I'm of course holding the bag for Tilray, but I'm still hoping that after the merger things get better. I'm actually really negative on Tilray, so let's see how it goes. Yeah, my orders, let's check. DraftKings, BNGO, BNGO is already under 7, and Nano Dimension 740, IDEX 2.7, almost close to hitting the target there. Let's have a look at Sun. Yeah. Yeah, let's see if we can actually get a better price still out of this one. It went as low as 8.6. I mean, that was like 8.5. That was just brutal at that round. I'm still thinking it can come down to 10 point something, but let's have a look at I have 1150. Yeah, let's keep that in mind. What a day. Maybe have a look at it here. You have Crane shares 1.5, ARK almost 1.5, all of them. Amazon minus 0.5. Alibaba is actually the one that is doing great, basically based on the result that they just got fined, and basically, at least for some time, they're just getting over with that. Square 260. I actually sold my Square yesterday. No, on basically Friday. I just took the profit out of it to 65 or 6 was about it. I was expecting a downtrend for that one, so I have to keep an eye. If it comes down, I can actually re-enter the trade. CrowdStrike relatively okay. It went, I think, below 200 today at some point, but still good. Palantir minus 4.5%, Nvidia almost minus 3%, Canadian Solar 4%. Yeah, Jumia minus 5%. Pretty red day. It's a painful day, really, but yeah. I think it's important to keep in mind that do not get crazy happy when you have a green day, and do not be scared when you have such red days. The point is that I think if you had stocks that they basically took off some time ago, and people should have taken some profit out, and that eventually would help you in the long run. We're gonna look more a bit into more into the individual stocks, but also actually UK is easing down the so let's have a look at
So a lot of reasons to celebrate, and let's bring on Yahoo Finance's Latoya Harding, who brings us the latest there from across the pond. Latoya?
Yeah, that's right. Today is the first day in months that non-essential retailers and outdoor hospitality venues were allowed to reopen across England and Wales today. So that includes, as well as pubs and restaurants, hairdressers, salons, gyms, zoos, theme parks. Non-essential stores have been shut since the 5th of January, and that was when Boris Johnson announced a third lockdown in England, and other measures as well were similarly taken across the devolved nations. Now, this is the second step in the roadmap out of lockdown, the second stage out of 4. And it means that 6 people or 2 households can meet outside, and weddings and funerals can have up to 15 to 30 people. The Prime Minister today reminded people to behave responsibly. And it also followed warnings over the weekend from scientists that there's evidence of virus hotspots in many parts of the country. Now, earlier today, we heard from Springboard. They revealed some footfall figures for today. So there's all today's trading up until noon. And they said that footfall was up 350% compared to last year. And that's when we were in lockdown last year. And it was also up 100% compared to last week, Monday, which was Easter Monday and a bank holiday for us in the UK. But despite that, looking at markets today, the FTSE 100 did end in the red. And that's, of course, despite the UK economy reopening. It did lag behind its peers today. So we had the DAX and the CAC closing pretty flat today. They spent most of the day in the green, whereas the FTSE 100 was in the red for pretty much all of the session. And also on the FTSE, retail stocks were a lot lower today, with the likes of WH Smith's, Primark owner, Associated British Foods, and JD Sports also in the red. However, we did see banking stocks rallying on the day in London today.
All right, Latoya Harding bringing us the latest there across the pond. Congrats again on the reopening. Very happy for all of our British friends over there. We're going to take another quick break here on Yahoo Finance Live, but when we return, Wednesday's big day for Coinbase finally arriving as Bitcoin surges to a near all-time high, still holding above 60 grand. We'll break that down, as well as another Bitcoin ETF filing as they all stack up for the SEC to review. Much more on that ahead. Stay with us.
Yeah, so quite exciting day for our friend in UK. So congratulate to them, and hope that they can keep a healthy environment for themselves. Well, let's back to our stock thingy. What do we have here? Again, I would say it's a pretty red day, so we're gonna gradually start looking at individual stocks that would help us to identify the ones that are probably more interesting to us. But let me check any special movers today. Yeah, Tilray minus 13%. That's just, let's just start from top. Let's look at Tilray. Let's see if we have, first of all, now we have a gap that we can basically close. So that's a good thing. And it's not good that it's going down, but I mean, if you're already in this gap would then help you, obviously. But the momentum actually looks like that it's going down. The next support line for us will be where will it be? So it will be somewhere around 15.65 or even, yeah, 85 actually. So yeah, so this is actually the next one. We don't have anything else, and yeah, I expect this to go down all the way, or we can then clearly see a rotation up back, but I don't think today you're gonna expect this. Usually this is one of those days that I believe you can actually wait and basically get into the position a bit late in the day. That would help you because probably the stocks that are going down are not going to recover today because they're all going down in expectation of tomorrow's result. So it will go down generally today. You might have a small comeback, but generally I think it's safer if you buy. I bought a couple of things, but those were bought because I was actually having some orders placed. And but generally my orders are all at the support location, so these are all placed at support. So in that sense, that's also for me, because I'm nibbling down, it's not an issue really. I can put a small amount of money there, but if you want to put something big, I suggest you to do it basically late in the day. Let me see, what else do we have here? Yeah. Okay, so what else do we have here? Let's have another look in our list. So Tilray, I expect this to go down to around 16 or 15.85. Let's look at GME. GME, the next stop. Actually, there is a... No, there's nothing. Sorry. So something around 133.5, but I wouldn't really hold my breath for this. In my opinion, it's clear that today it's gonna stay down, and yeah. Plug, one of the really those stocks that got hammered today, basically hammered, and this looks actually a bit dangerous. So it's almost at some sort of a support. Let's zoom here. So our price is right now at 29.45, and maybe this one. Let's turn these ones all the same color. Oh, now I think actually you guys see it better when it's white. So on second thought, let's keep it white. Yeah, 28.7 is the next one. Let's have a look at the day chart. So this one obviously is completely in the downtrend. As I mentioned before, I would wait to see where it bottoms, and then where it bottoms. until it finds its bottom. So then we can actually start. So just double check that I don't have any plug in my list because it's going down quite heavily. Okay. You mean today? No, that's for tomorrow. That's for tomorrow. I don't think eToro is very bad. I don't really think like that. I think eToro has the worst problems about eToro is first thing is that you can get quite large spreads. The second thing is, but still that's okay. I mean, if you are even doing swing trade, if you're not scalping, then it's good. If you want to do a scalping in eToro, you have to actually be you have to find the stocks that you can actually do that, because the spreads sometimes are too big to actually do that. Even for gold and things like that, I don't use eToro for that. But if you're gonna basically do copy trading, that's perfect kind of platform for it. The other basically bad thing about eToro is that sometimes they get their system gets stuck. A couple of times during the last couple of months crash, basically they just stopped the whole platform, and that was really painful for people that wanted to close or open. I mean, especially if you want to close, that's a very, very annoying thing to have. But they said that they actually worked on it and it's much better. But yeah, let's see. Let's delete some of these. These are a bit too congested right now. So right now these are the two ones that I'm looking. Can argue about this position 25, but it's not a bad idea to actually keep these in our radar in order to see. So 28.71, 25.45, and 22.36. Let's have a look at 30-minute. This is still going down. This is still going down. So let's just wait it out and let's just wait it out. Some news about Uber.
Demand is picking up. When you consider the struggles of this company, especially on the ride-hailing side over the last year, it seems like they still have a long road ahead.
Yeah, it's an interesting release from Uber out in an SEC filing early this morning. Really 4 pieces of news here from the company, and we'll kind of break them down. On the top line, as you mentioned, Akiko, 2021, March 2021, the best month in the company's history for total company gross bookings. So that is certainly a positive. The company noting that it does still expect to get to adjusted EBITDA profitability in 2021, but that it will still need to increase its investments in driver incentives to match demand in the near term. So increasing investments on the driver side, maybe call that a slight negative. Positive on the other side of that is consumer demand is recovering faster than driver availability. So we also see the company saying consumer demand for delivery also continues to exceed courier availability. So there's a positive. Then another negative, company expects to record a significant accrual related to the reclassification of some of its drivers over in the UK. We remember that court ruling from the middle of March. So the company is going to have a big hit to its results in the first quarter of 2021, taking a charge over there. So again, you've got record top line growth, you've got competition for drivers, you've got demand exceeding supply of drivers, but you've also got a charge on the reclassification of drivers over in the UK. I think the stock reaction.
Someone is asking, you can actually see the values at the right side of this one. This is the trading view. And when you put a certain color of support or resistance line, or any line basically, you will have the same color value at the right side. So that's probably easier for you guys if you can just see that. And yeah, Hope that helps.
Coming in the door as the economy reopens, investors are likely to remain excited about that story first and foremost.
Yeah, it's a good point, Miles. I mean, because you could talk about it being an Uber story, but I think back to March of last year and how much we were focusing in on things like open table reservations, air travelers, and also, yes, Uber rides being booked as well in this as symbols for the rest of the economy as well. But when it comes to Uber and theirs, as you're walking through kind of what we learned in this filing, still on pace in their minds for profitability later this year too, right? And they've had the luxury, shall we say, of catching the boost on the other side in terms of Uber Eats. Lyft doesn't necessarily have that. We're seeing shares down today. So I wonder how much might be placed on how these two companies have been able to navigate this seemingly effectively on both ends. And even though Lyft doesn't have that Eats side of the business.
Yeah, it's interesting though, Zach. You look at the Eats side of the business for Uber. That's still a loss leader. I mean, on the mobility side for Uber, and then on the obviously the core business side for Lyft, they've had adjusted EBITDA profitability on a per ride basis, or at least Uber has now for several quarters. Really, the drag on getting that adjusted EBITDA profitable number has been on the mobility side. It's been on some of the other international bets. They've sold off some of those areas. The bets they made with self-driving trucking and some of those other plays that kind of had that other bets area, the way that Alphabet has carved out, those have really been the drags on Uber's financial performance. And I think that with both of these companies, Lyft and Uber, likely seeing huge demand from yourself, from myself, from Kiko, everybody else who's getting out and doing things as we get into this summer. I think the story there likely becomes even more positive, that they're able to raise prices even with the need to incentivize more drivers to get onto the platform. But at least in the case of Uber, you still have those other parts of the business that, while the Eats business is growing faster at a top line rate, it's still a loss leader. I'll be interested to see how committed Uber stays to that part of the story if the economics, the unit economics on the rides just become so compelling.
Yeah, all right. Let's go on with the graph basically. So we looked at Tilray, GME, also Plug. Plug also I would wait more on. Let's see, 30. Well, it's getting close to this 28.71 limit. It's already out of Bollinger Band. Let's see if it actually comes and hits here. If it hits there, you can have some sort of bounce, and maybe it's good for some scalping or some basically short trade. Virgin Galactic minus 8.7%. It's actually breaking through the line of resistance. Actually, within this box, let's just get rid of this box now. So we have had our other thing there, and it's actually already hitting there. Where is that? Okay, it's here. So it's at 26.76, and I think I bought something at here, maybe, I guess. I think I bought already at that position. I had another order there. I'm thinking actually about getting IDEX or not. My IDEX has relatively high average cost, like many other of my positions right now, so I really want to bring it down, but I don't want to go too heavy on IDEX. I have a lot of other speculative plays. Let's keep one at here, and then we will actually add a bit more when it actually breaks down there. Let's keep it now down. Let's remove it actually. I think it makes sense to just remove it now and just wait for the price action, and then buy it if we need to. The current momentum is actually still down. It could play here today and then tomorrow it comes down or goes up. I mean, it can really happen that it's there, but maybe it's just too soon. Maybe it breaks down already today and comes down here. If that happens, then there's no reason to buy it here. I can actually put all the orders there. But I don't think it can actually move up today. So yeah, SunW and NDM, BNGO, I try to get them at better prices today. Tilray the same. Okay, let's have a look at SunW. Very, very volatile stock. Let's put these dash lines. Okay, someone asked the question, what to trade today? All red. Well, of course, when everything is red, you can actually have a SQQ. Where is SQQ? Yeah. So actually SQQ did not play very significantly today. So there was not too much of movement today from the big guys basically. Yeah, as you can see, it's only minus 0.20 and yeah. How about VIX? Not really. Not really. UVXY. Yeah, so probably the best thing is if you want to trade today, go to the individual stocks, and I can actually have a look at something if something comes to mind. I can shout it out here, but of course I don't make financial advice here. I just say what I believe is the way to go, and as you can see, I put my money where my mouth is as well. So let's see. What was your SunW? So actually 1182 is the next one. Now that I see, yeah. So around 11. There's actually another one, but yeah, for now I think we are okay with these levels. Why did I put 1150? Where's the point that I put 1150? Is it here? It's here, isn't it? So what I do actually, I should consider the spread, because the spread in Ethereum can be big. So this is actually 4. So when I put here 1155, so somewhere around 1150. It's probably this gap here, but it's 11. I don't know why I put that value there. I mean, there is a gap here. Did I actually go for this gap? Maybe. So there is this gap at this location, and that can actually be the case. Honestly, anything below 13 or 14 is good for this stock. I think this stock in long term will actually just go way higher than it is now, and I try to all the time reduce my average cost on this. So if you have money, and if you can, not necessarily for this one, but for others, it can be a very good way to make something. Let's look at this one.
Price increases across chemicals, lumbers, and the like. So I think that commentary in particular will be crucial. I also think that when we hear from companies like PepsiCo and the like, what are they seeing in terms of benefits as different geographies reopen? What do they see that pace coming over the coming months, not only in the second quarter, but really in the back half of the year? And then, of course, we traditionally lead off with a slew of banks, and that is once again going to be the case. What are they seeing in terms of loan activity? What are they seeing on the investment banking side, given what appears to have been a record quarter, not only for M&A, but also a huge quarter for IPO activity?
Yeah, we're going to be talking about that in just a second, at least the IPO activity. But when it comes to kind of expectations on the street for earnings and where we go from here, that obviously is going to be a big factor. I think in the quarters moving ahead, comps are going to be tough to tease out and really figure that out. But I think to your point, forward guidance and the return of specifics on that front might be welcomed by investors. But which sectors are you seeing as maybe the highest propensity to beat those already kind of lofty expectations for the quarters ahead?
Well, I think when we look at the sectors that are likely to have, far easier year-over-year comparisons, clearly it's going to be retail. I think a lot of people, including myself, were blown away at the Buckle numbers that came out last week. We could also look at restaurants as they start to reopen on their dining front. And by that, I mean in-room dining. Chipotle made some very bullish comments about that last week, that they're still seeing tremendous results on the digital front, even as they start to open in dining space as well. So I think those are two key sectors that people are going to look for. But I also heard you guys talking about the setup about what's going on in Washington today on chips. And I continue to think that even as we see robust demand for 5G data center chipsets, that the semiconductor capital equipment industry is simply going to boom. Here we're talking companies, Applied Materials, Lam Research, KLA-Tencor, because not only do we have this near-term pain point that is the automotive sector, and of course we're talking about some provisions in DC to address that and more, but we've also got TSM that already announced they will spend $100 billion increasing capacity over the next 3 years. Intel came out recently saying they're going to spend $20 billion to not only increase their capacity in the US, but enter the foundry market as well. So that whole semi-cap sector, I think, is going to continue to rip throughout the balance of the year.
Yeah, it does feel like the demand is certainly there. It's just a matter of how quickly they'll be able to ramp up production to be able to meet it. I'm wondering how you're looking at some of the growth names right now. You talked about more of the reopening trades that you're going to be looking for any signs of pickup there. But some of these names that we've seen see huge growth over the last year. There seems to be concern about how sustainable some of that momentum is.
I think that's a fair point. Given the amount of time that we have had to shift how we do things, there's likely been some structural change in what we're doing. To me, the bigger questions are, will business travel come back? That will have a pronounced impact particularly on the airlines, but hotels as well. And if it doesn't come back as, in a one-for-one capacity, that means that other modalities are being used, whether that's Zoom, Microsoft Teams, what have you. So I suspect that the pendulum is going to swing back, but nowhere near to what it was previously.
Okay, Chris Versace, good to talk to you today, Tematica Research Chief Investment Officer. Well, up to be a very busy IPO week. The big one on deck, though, Coinbase going public this Wednesday through a direct listing. Let's bring in Duncan Davidson, Bullpen Capital founder and general partner. Duncan, a lot of IPOs to get through too, but let's talk about Coinbase first, because we were talking about this, Zach and I were talking about this earlier. This is kind of a bellwether, if you will, for how investor appetite is going to look when it comes to cryptocurrencies. How are you looking at this IPO shaping up, and what are the expectations?
It's going to be huge. Understand Coinbase is an anomaly. Although it's sort of a banking type of entity, it has become the Facebook or Google of crypto. It is so dominant The question is, how did Goldman Sachs let this happen? Coinbase is an amazing opportunity. It's churning out lots of cash, which is why it's going out as a direct listing. It's a perfect direct listing candidate. It doesn't need to raise money. It's a cash engine right now.
Yeah, and Duncan, I mean, you've been through this a few times, right? So when we talk about IPOs, whether or not it's an investor or bringing companies to market yourself, talk to me about what you've seen so far to start the year, because we saw a lot of companies come out the gates double on day one. Things not necessarily as hot in Q1, but now this week, I mean, there's a lot coming down the pike here this week. So I mean, where are you putting the temperature check at right now, and kind of reinvigorated demand here to kick off Q2?
Well, first of all, we have to recognize that SPACs have eaten the normal IPO market. They are a predominant factor in the market right now. And they slowed down a couple of weeks ago. There was a little bit of a chill in the SPAC market. And I don't know if you guys have reported on this yet, but the SEC stepped in late last week and is trying to make the SPAC process more like a normal IPO. I think this is good because, in a way, we're in a race with SPACs to either institutionalize them or have them blow up because of too much excess. And so the SEC stepping in as part of this process to make them more institutionalized. And I think the SPAC market is going to stabilize. It may have to digest the SEC comments, but I think it's going to get revved up again after people incorporate what the SEC is trying to do in this market. But I can go deeper if you'd like.
Well, to what extent do you think that just the scrutiny alone is likely to dampen the SPAC boom that we've seen over the last 4 months?
Well, there's an interesting part of SPACs, which is quite fascinating to me. Normally in an IPO, you can't do a projection. But in private markets, venture capital markets, companies make projections all the time, and we scrutinize them, and they're used to figure out whether the prospects of the company are really good or not. In SPAC world, because the SPAC IPO has no projection.
Okay, blah, blah, blah. Look, what I suggest everyone, and this is not financial advice, so just do what you think is correct. But what I have done is that basically I try to cancel, not all of them, because I know that some of these won't actually be hit. But I think it's maybe wise to not put today any order at the recent supports, because it might actually get broken, some of these, and if that happens, then you don't want to be actually buying already at these prices. It could go up from here in many of these cases. Obviously, I know that's a possibility, but then the way today is actually turning out is that I think we will have some sort of a basically coming back or bouncing today, but again later in the day it will go down again, because the sentiment of the market won't be changing today, and that is what will happen. It will go down basically today. Yeah. So let's look at some of the other things that we were looking. SunW I showed. I think honestly, if we can get this below 10, absolutely. I mean, some of the prices are exactly at the level that I wanted to get them more, and if I get back to them, then I will definitely put money in them again. I mean, look at these numbers. I mean, look at it. Senior Surgical, it got destroyed. Let's see if anyone has anything on this. it's not a bit overvalued. It is overvalued. So it's basically says that because it's already taking into account the 2 years in advance, it's a bit over. I thought the resistance will be around $3. Yeah, there was one at 270, I guess. Yeah, that's exactly true. So what he says is that basically many things are moving against this stock. So although it has similarities to Intuitive Surgical, they are profitable and these guys are not. And exactly, so the only question for this stock is that do they have enough money to actually stay up, because they have a product that is actually interesting and in long term they will grow, and that's for sure, because this is basically the way that it is and has been and will be extremely interesting for the medical section or sector. And so what he suggests, and I think is correct, is the fact that it is a long-term play. So if you want to be in this one, you should be for it in long term. So if you are aiming at least for those $6 prices or so, in my opinion, you might get this money back. I mean, if you are buying at these prices, yeah. But if you're already losing money on this stock, I think that you should wait long. If you bought somewhere around 5 or 6, you have to just wait, or you just have to cash out. I wouldn't do that because that's an extremely big loss unless you have a small and you're good to actually lose some money. I usually am not. If I do not need the money, I do not sell in loss. So I have many stocks right now that are not doing good at all. But I'm not selling them. These are not the basically money that I need to actually cash out. So it's important. This is a money that I don't really need right now. So I wouldn't sell loss. But again, depends on that. But it really got hammered. Like when you look at these, this is really painful. People, of course, are very angry at this current prices, and you understand why, and it's actually a free fall right now. Yeah. Okay, so let's look at the next one. What do we have here? We talked about these. Virgin Galactic. Let's have a look at 30-minute. I think this is just a short move. I think it will come back again. So, but exactly at the support, it actually is bouncing a bit. Yeah, as I said earlier, I think it's better if you wait and buy basically near end of the day, because you never know if it's going down or it's bouncing back. So better not to go crazy. Today is a very red day. I mean, look at these numbers. I mean, everything is like crazy. And look at this, like this is an extremely red day. So I think it's wise to not set order. I'm also like, these are my Chinese stock. I have to maybe even prepare some of them, but I will buy if these actually go to the lowest limit here, but otherwise I try not to buy at this time of the day. Just wait a bit more and you will be rewarded. Okay, let's see here what these guys are saying.
For care, right? And what Nuance has been able to do is build an amazing triage engine through their conversational AI to handle that. And they have tons of clients using it already. I think they have something like 500,000 doctors and nurses already engaging with their product. So that was obviously very attractive to Microsoft.
As a company, by getting bought out by Microsoft, anyone who's out there as a founder seems like a good way for things to end. Of course, this isn't the end for Nuance by being acquired by any stretch of the imagination, but interesting because you guys are launching a new podcast focusing in on the way that founders operate. Some of these companies, where they tend to go, the work that goes into eventually getting acquired, or just taking on some of these tech giants as well. And Jordan, I mean, TechCrunch is kind of unique in the access that you guys have to these founders, but talk to me about what you're hoping to do with the new podcast that's just launching and really learn about the road and difficulties that these founders face.
Yeah, I think it's so common that we learn about the stories of big name founders like Steve Jobs and Evan Spiegel and Mark Zuckerberg. It's easy to look back once they've attained such tremendous success. But what Daryl and I get to do regularly is talk to founders who are at the earlier stage and have long kind of drawn out conversations with them. And only a fraction of that ever makes it into the article on techcrunch.com. Oh my God, I'm so sorry. And so what we want to do is really expose those conversations and get into the nitty gritty, get into the human side of what it takes to build something from scratch and kind of let go of your safety net and dive in. And so it's been a really fascinating and fun conversation so far.
And Daryl, finally, it's been interesting to see a lot of companies that typically would not have come to market, coming to market this year, over the last year through SPACs, so many other avenues. But we've also got huge valuations on the private side too. What's your sense when you talk to these startups about how they're looking at their exits now? Has that shifted at all as a result of the environment we're in the public markets?
It definitely has shifted. I mean, I've had lots of conversations with founders about their approach to SPACs and why some have chosen to do SPACs. For instance, I spoke to Astra CEO recently, and he was very explicit about, I kind of wanted to essentially cut through the BS and get to the fixed amount of money quicker. And same for Rocket Lab, so both space companies, and Peter Beck, that for him, it was, okay, I know that this process is long and drawn out and very painful and also dedicated if I do the traditional IPO route. And if I go ahead and do this, I know the fixed amount that I need, which I can set, by negotiating the right pipe and everything. And that will be the amount I need to build my next rocket and test it and fly it, right? So he likes the fixed version of it. He likes that he's not playing a gamble on debuting to retail investors and hoping they react well. So I think that's kind of what the appeal is to startup founders specifically. It's the speed and it's the sort of defined constraints. But definitely it's something that comes up on the podcast too, because we are talking to companies at various stages, and we're talking to companies that are getting closer to that public exit process and mulling the various options available to them.
Well, certainly looking forward to listening to the podcast.
Yeah, all right. What else? Let's look again. The ocean of red. So basically what you can see is that many of the stocks are actually just let's have a look at 1 min. It sounds like that. So it's actually consolidating at these prices. I mean, it's totally possible that I hate 1 minute charts. It's totally possible that they go up, but I doubt it. So the reason is that it just fell down so quickly in the day, but I would say we should still wait. So Chewy actually went positive today. Oh, a Square actually went up. Let's have a look at the Square. Let's have a look at the Square. I can totally see that it goes higher and then comes down, but it should come down. Let's look at some of the ones that are actually going up today. Riot and Mara.
Preceding the record-breaking year. Let's bring in Aaron Terrazas. He's Convoy Director of Economic Research. Aaron, we saw what happened last year. This certainly doesn't sound promising, but how significant are the disruptions likely to be? And to what extent have a lot of these firms learned from the lessons of years past? Because this feels like a new normal now.
You know, every year brings its own kind of set of natural disasters. They are becoming more and more common, more and more devastating with each passing year. So to some degree, there is preparation. You know, if you have a facility in the Gulf Coast or in the Southeast, you know you're going to be hit by a hurricane at some point, in August, September. But you don't know quite when, what week, what facility. and planning for that is always a headache for supply chain managers.
It's difficult to plan around all that stuff, but it's also difficult to find the bodies who want to drive in all of this too. And we've talked about a trucker shortage already before you factor in weather or other factors as well. But talk to me about what the trucking industry right now is doing to fix that problem, because we talk so much about self-driving trucks, but even
yeah, these are all adding up to this discussion of inflation. These transportation, the freight, everything is actually affecting the supply and demand, and it's very clear that as soon as you have any problem in the supply chain, there will be an issue basically in the prices, and then there goes more basically inflation discussions. So yeah. Let's go and check Walgreens. This was a good one. Why didn't I didn't see this probably. It has been actually a good day trade for today. VIX, Microsoft, Nike, Roblox. I want something that is none of them actually. Not good, not good. I mean, not that it's not good, it's just the format of the values are not in a form like this one. Like yeah. So I was looking if I can actually find a day trade. Nothing right now. Well. All right. Look, I think I will keep it at this level now. I think I will be back in some hours to double check again the prices. And if you're interested, then basically join again to see how the market closes. That's probably where I also start to put some orders to buy some more. And basically, to me, this is for certain stocks buying a dip, but let's see what happens there. Thanks everyone for joining, and see you soon.